Good morning, good afternoon, good evening, everyone. My name is Samuel Gebre. I will be moderating this East African regional panel on fintech. Thank you, everybody, for joining us. So today's topic is going to touch on fintech in the East African region, and we have 4 panelists who will be discussing on what's going on from Ethiopia to Kenya to Tanzania and Rwanda. And I will do a brief introduction of who they are. So with us today, we have Yemiru, who's the CEO and founder of Moneta Technology. We also have Jonas Asefa, who's the country director for USAID Catalyze. And we have Anna, who is the financial inclusion expert at UNCDF for Tanzania, Rwanda, and Ethiopia. And then last but not least, we have Firas Ahmed, who's the group CEO of AzmaPay in Tanzania and Mauritius. A bit of housekeeping. We'll give everybody about 8 minutes to answer the questions I'll be asking. And then at the end, we'll have a Q&A session. So please put your questions in the Q&A section of this broadcast. And with that, we will get started. And first, we will begin with Yemiru, who, as I said, is the CEO of Moneta Technology. I will allow him to sort of explain what he does with Moneta in the countries he operates. But overall, would you please explain to us the sort of the fintech space in Ethiopia, the fintech and the e-commerce space in Ethiopia? There have been a few big headlines coming out of Ethiopia. Ethiopia is working on liberalization and privatization of its telco sector. There's a lot of interest there. There's names like Alibaba being mentioned. So just expound on what's going on in Ethiopia. What opportunities are there in the telco sector specifically?
Thank you, Samuel. It's nice to be here at the African Fintech Summit today, and I will start my quick overview of the Ethiopian macroeconomic perspective and a little bit of the fintech and the e-commerce space, as well as other areas that are relevant for Ethiopia. As everyone knows, Ethiopia has been going through a tremendous amount of change in the last couple of years. To say most importantly, the relevant sections about the Ethiopian fintech and e-commerce space. There has been about 6 different regulatory frameworks that have passed in the past 6 months, shall I say. Major change is that fintechs are now relevant in the marketplace. Before, only the banks and can operate in terms of the financial sector. Now what we have is fintechs can become what they call payment instrument operators. So they can issue e-money, and they can become part of the financial sector in terms of exchanging e-money for cash. Along that, there is a whole national digital strategy that has also been passed as part of this exercise. Starting from the time COVID has been announced in Ethiopia, there is 4 different directives. One is the Payment Instrument Directive, the Agent Directive, the Payment Processor Directive. Also, there is the ability to do electronic transaction. That is more of a proclamation, but electronic transaction proclamation, which changes everything. So in the past, when we operated as fintech, it's a bank-led model. So we worked with banks. Banks do the actual, and fintechs only provided the technology and the operation and know-how in the marketplace. Now things have changed, and a lot of fintech players are now in the market. Mobile money operators, there is about 5 of mobile operators right now. Most of them are partnered with a bank, and some of them now are changing their perspective and going into the market with their own license to operate in the marketplace. As everyone knows, Ethiopia is the second most populous state in populous country in Africa, with 115 million population. With that comes a lot of issues and opportunities. The issues that we see is that we do have a large country and a large population, and it's very difficult to reach. And there is huge unbanked population that requires a lot of technology, as well as financial literacy, as well as technology and all those different things. With a sole single telecom operator, it's very difficult to reach everyone. However, we do have a large population with mobile money and mobile subscription, which is about 43 million. We also have about 17 million smartphone users in the country, which gives us the ability to provide more user experience in terms of utilizing apps and so forth, which gives an entry into e-commerce as well from that perspective. When we are talking about e-commerce, e-commerce right now, it's at its infancy right now in Ethiopia, and mainly you see in ride-hailing areas and food delivery, e-delivery type of areas being in the e-commerce space right now. As a matter of fact, in terms of ride-hailing, we have right now about 19 different ride-hailing companies. We have close to 27 different e-delivery companies, including like the Ethiopian Postal Service is one of them. DHL and Ethiopian Airlines have gone into a joint venture, and they are doing also last mile delivery as well, locally and internationally. So there's a lot of players coming into the market from that perspective. Recently, there's also been a talk in terms of the telecom liberalization and privatization of the sole telecom that we have. It is said that in the next couple of weeks, the actual tender would be coming out for the privatization. And there is 2 licenses which are being liberalized in the country. And there is about a few suitors that have come in who have expressed their interest in terms of coming in to bid for those licenses. But these licenses are spectrum licenses. They don't include mobile money. So the spectrums that are being sold are 2G, 3G, and 4G licenses. So anyone that is coming in from that perspective will be operating a telecom, not a mobile money. So the opportunity is that companies like us, Moneta, who operate the brand name Amole, we could partner with any one of these mobile money telecom companies to provide mobile money capability as well. So this liberalization has about a 5 months timeline in terms of from the bid to actually awarding. And we're looking at in the April timeframe being awarded according to the schedule. Now, that schedule has been modified several times, so I'm not exactly sure. But 2 weeks ago, that was the intention, is by April to award this 2 licenses by April. Recently, everyone might have heard that Alibaba has come into Ethiopia. And as the co-sponsor of the EWTP, Ethiopia now is the second country to join behind Rwanda in terms of being a hub. And now, as of last, actually Sunday, I think, or Saturday, our president, Madam Sahle-Work Zewde, announced the launch of Alibaba, Ethiopian coffee being sold on Alibaba to the Chinese consumers, and B2B and B2C. This is a big development in terms of opening up the market for Ethiopian goods for the outside world. And the interesting part of it is Ethiopia, it's very difficult in terms of if you want to export something out of the country, the paperwork required and all the different things that is required in terms of being able to orchestrate that, the money movement, all those things is very much a hassle. And now with Alibaba being able to orchestrate all those things in terms of logistics, in terms of fulfillment, in terms of the exchange of money, there is a lot of legislative acts and regulations that needs to be facilitated in order for this to take place, which I'm glad that it is Alibaba doing it with the government, because then they would be the one to go through the pains and scars as opposed to us trying to do it. And because we've been in this market for the last 10, 15, 13 years now, and every step is a regulatory hurdle and a lot of paperwork and regulation but not being there and so forth. Sometimes we are ahead of regulations, sometimes we are ahead of our so a lot of those things create a lot of operational headaches and delays, and a lot of different problems when it comes to investors. The confidence erodes as delays come along. So by Alibaba being here and with the Ethiopian government, those things would be paved quickly, and other e-commerce, local e-commerce could flourish quickly to be able to sell Ethiopian products to the outside world. And for the first time, we are also, Ethiopia as a country doesn't have an e-commerce gateway to be able to accept Forex. And I'm happy to say that Moneta, in conjunction with Dashen, we are launching our e-commerce gateway in beginning of December. December 8th is the schedule, and Abyssinia Bank just launched theirs. So what this gives us, basically, any Ethiopian local company that is not allowed to have a merchant account outside of Ethiopia now is able to accept Forex in order to be able to do e-commerce or hotel reservation for simpler matters. So those kind of things, we will be able to accept Visa, MasterCard, Amex, those kind of things. So a lot of different things has happened because of COVID, and it has helped us streamline a lot of the regulations and the proclamation that came to play. It has opened up significantly in terms of what we can do with as a fintech and as e-commerce.
Thank you very much, Yemiru, for giving us that overview and giving us the specific examples. One thing that you mentioned and is key is Ethiopia has been available for Ethiopians so far, has been only open to locals, but it seems to be opening to the international market now with Alibaba being one of the big players coming in, and the telco companies. And moving on with the same line of thought and expanding into the region, Johannes Asefa, unfortunately, your 2 minutes of your time have been taken by Yemiru. But could you also just go forward with what he mentioned on policy development and challenges that are faced in policy development, as well as what are some of the trends that you see in the fintech space as you work with USAID?
Thank you, Samuel. So I work for a project called Catalyze Market Systems for Growth. It's a USAID funded 5-year project that's just launched in Ethiopia. And a big part of that project deals with supporting the development of the digital economy in Ethiopia, including the fintech sector. USAID has a long history of supporting digital economy development across the world, and including fintech. So it might be new to Ethiopia, but has played a big role across the world, including the Philippines, where it was instrumental in helping to develop mobile money in other countries. The region has actually been one of the most active region in terms of fintech development compared to the rest of the continent or even the world, because of Kenya's innovative M-Pesa system, which no one ever expected will be this explosive and important. M-Pesa's success has spawned interest in other countries, including in Tanzania and Uganda, and now Ethiopia. M-Pesa is interested in Ethiopia. I know Moneta has been talking to the M-Pesa people and others, but the regulatory challenge is going to prevent them from coming to Ethiopia. In terms of the policy development, the earlier been mentioned, the mobile money systems, the earlier ones were non-bank created mobile systems like M-Pesa, because the technology outpaced the regulatory systems. And there are risks involved and benefits when you're ahead of the regulatory framework. Somalia is the other. By the way, you didn't mention Somalia, but Somalia has a very active fintech and mobile money system, which really organically developed before any regulatory system was developed. But the systems that are mobile money systems that are coming up after the M-Pesa system have been mostly bank created. And this is for risk mitigation management purpose. In fact, there's a joke in Kenya, when the president goes to bed, he prays and says, God, please take care of my people. Oh, and by the way, the CEO of Safaricom, because, something like about 25% of the GDP of Kenya goes through M-Pesa, and it's not bank rated. So, the regulatory, the management system is not as robust as it would be if it's bank rated. For that reason, and the more developments, so more of the systems that have been coming after M-Pesa have been bank created. The other issue in the region is interoperability between the different wallets and different companies. MTN has its own system, Safaricom has its own, and so on and so on. Within the East Africa community, there's been an effort to push the telcos to cooperate and work together and create interoperability. And not just in one country like in Kenya, but across borders as well. And it's been a challenge for many reasons. There's a turf protectionist policies, but also national specific interests in each different country. There are different outlooks on policy from country to country in the region. With fintech developments, the other thing that's really happening is fintech is sort of the catalyst for opening other areas within digital economy. One thing is really important to talk about is usage of a mobile money network. Just because one country has a mobile network or mobile money system, it doesn't mean the usage level is high. In some countries, it's very high, in others, it's not. And to some degree, that's influenced by the level of the ecosystem developed around the e-wallets or the payment systems. If you don't have an ecosystem to leverage that payment system, the usage level drops. Other areas are, literacy, financial literacy, and so on and so on. But key areas of ecosystem development that, for example, donors, development partners like USAID have been very active is e-health, e-agriculture, e-logistics. Before my move to Ethiopia, I was in Nairobi for 3 years. My project, for example, worked on a regional agricultural trade for food security. And one of the things we championed was the development of grain logistics in partnership with IBM Labs Africa. One of the labs is in Nairobi. And through a competitive process, for example, we picked Kumwe Logistics, which is based in Kigali, that actually works more like Uber Logistics. It aggregates in a more efficient way using technology to bring supply and demand in the logistics, and it's specifically in grain logistics, right? There's Lori in Nairobi that's looking at containerized freight, but these kinds of ecosystem development allows fintech to develop and thrive. You don't have payments, unless you have the products to buy and sell. E-commerce is the other development in Kenya. I'm sure my Kenyan friends will attest, everybody is in the gig economy, right? Even your maid has something on the side, or the secretary, everybody, or the CEO. And that's largely driven by e-commerce, the integration of e-logistics, e-payment systems, right? So when the ecosystem is fully developed, it allows for the development of the fintech, the thriving of the fintech systems. So with us, for example, in Ethiopia, what we're trying to do with our new project, we just launched the project October 1st, so we have a long way to go. Our goal is in keeping with the national digital economy policy and strategy that the Prime Minister has championed. And by the way, the Prime Minister of Ethiopia should get really huge credit for his vision in this area. As a former Minister of Science and Technology, he's been pushing the adoption of digital economy and digitization in general across the whole country. And in 2 years, earlier, Yamiru mentioned it, has been a raft of policy changes in Ethiopia. 10 years ago, I was in Ethiopia working on WTO accession. And one of the areas we were looking at is services liberalization. That includes the financial sector, telecom. Now we're looking at telecom liberalization without even accession to WTO. And then the national bank policies have drastically changed. That's opening up slowly the space for non-banking institutions, which Ethiopia still doesn't have non-banking financial institutions doesn't allow them to use fintech to get into the financial services side of the equation. That's a policy challenge that there are a few more others like that needs to be done to open up the sector. But I'll stop here. My message is essentially, if you don't develop the ecosystem, fintech by itself would not thrive.
Thank you, Johannes, for that. And very important thing you mentioned about the ecosystem is also something I can attest to, having lived in Kenya and having seen the general tech industry mature, and now it has gotten depth and is working with the examples you gave of logistics, with the companies such as Lori, and what IBM is doing with blockchain in agriculture. It is very interesting to see that contrast between where Kenya is and where other countries in the region are trying to get to. And with that is how I'm going to go to our next panelist, Anna, who works with the UN CDF for Tanzania, Rwanda, and Ethiopia. And the question will come in sort of two folds. One is going to be a more bigger picture, overall regulatory space. If you could give us what your experience has been in terms of seeing what the policy environment for fintech has been in these 4 countries, mainly that you work in, given that the key term we use when we talk about fintech, especially in the startup space, is the unbanked population, and data can be varying, but we have 35 to 50% in Ethiopia, and we have over 80% in Kenya. So there's a wide range to cover. So what kind of policies are governments putting in, and if you could give us the difference between the extremes as well.
Yes, thank you, Samuel, and I hope the connection will stay up. I won't disappear again. This is a bit what you have been saying. East Africa has become the global leader in mobile money transfer services, as this can enable widespread access to financial services and participation in the wider economy, the ecosystem. But I would like to make an important point here. Oftentimes, there is some confusion between fintech and mobile money services, which use the rails of the telecom sector. This means that the regulator works with the telecom to set up the infrastructure or build the rails for mobile payments. When talking about fintech, the telecom provider may not be involved at all, or only partially. Think of if you had to download a new app on your phone. The discussion moves quickly from what mobile operator you have to whether you have iOS or Android, or the app size and the network reliability. What we see in East Africa, talking about regulation, is a big focus also on the business side on agency banking and having a reliable network of physical touch points for payments. We have not seen any product service scale up for real without these physical touch points on top of the digital ones. And congratulations to the Ethiopian government for the recent effort to regulate and facilitate mobile payments by allowing, Yemiru was talking about it. I won't repeat all the nice stuff that the Ethiopian government has done. But at this point here, we have the regulatory framework, some infrastructure, and the demand is there, obviously. The point now is to enable participation to enough providers so that these digital financial services are used, because they are not only available and accessible, but also affordable and convenient. Kenya came up a lot in this discussion already, and Kenya represents one of the most successful cases regarding the use of mobile money. I was talking about participation earlier. Kenya, and maybe to a lesser extent Tanzania, have been quite open in allowing payment providers and fintechs to participate in the economy. This has increased competition, but also exposed the associated risks, such as, for instance, the alarming levels of defaults and delinquency when we talk about credit. In Kenya only, more than 2 million people have delinquent loans, and half of them for loans are less than $10. This is a big risk also when we are talking about unbanked population and financial inclusion. Rwanda has been more careful in opening the market and allowing experimentation. And Ethiopia has the chance to learn from other countries and reap the potential benefit of fintech in general, while managing the associated risks. And because we are talking of financial technology, we should note that we are looking at very fast-moving industry, which makes keeping up with the regulation very difficult. We talked about that earlier as well, Johannes, we talked about that. And there is no single standard roadmap to follow if we have to take the next step of seeing what's the best regulatory framework that can be adopted. Because 14 years after Ifalusi, which was the first e-money issuer in Tanzania, not many know that, and 13 years after M-Pesa, uptake is still low, and gaps are not reducing as fast as we expected. And the key reason is the large infrastructure gap in the region. And I'm talking about electricity, internet connectivity, and roads. Very simple infrastructure. Sometimes it's not only about changing the mindset because, people do not understand the real value. Sometimes it's just about the experience that is not that great, because maybe I have to climb the hill and wave my phone in the air just to send money to my cousin at the next village. And at UNCDF, one of our role, because I guess you may all be curious, is to help government measure the country level of digitization and inclusion and set with the government priorities where they need to focus, ensuring that we are digitizing, and as we are digitizing, we are not increasing the existing divides, and the digital divide is one of them. Normally, there is a link that has been made between digital banking, mobile banking, and inclusion, because we often claim that sometimes too easily we conclude that mobile money services are increasing inclusion. And And there is a distinction here that Johanna started making between access and usage. We can say that in the world, I'm oversimplifying, maybe half of the population owns a mobile phone. Half maybe access financial services through the mobile, and less than half use the services, being optimistic. And what we're seeing here is that transactions are very sporadic, maybe 5 a month, and we can be happy with that. Mobile and fintech, yes, can accelerate inclusion only in presence of a digital economy, where different interfaces and systems can communicate. Sometimes we may say that we need use cases. And I was thinking about it, like maybe more than products and services, maybe we should talk about and see mobile, finance, and fintech as tools. If you have dish soap, this is a product with a very clear use case. You use it to wash dishes. And talking about payments, you can use mobile transfers to send money across countries, pay bills, fines, buy things, until I can use my mobile wallet to do all these things easily with control and certainty in the result. And better than without the mobile wallet, then we won't see full inclusion being realized among different geographies and demographics, economic level. We only be gathering the middle high end of the population. And this is a precondition for fintech to be an actionable to foster economic growth and development in the region. I hope I gave a good overview. I'm open to questions.
Anna has given us a reality check as well, and in trying to address this as not just looking at arbitrary numbers, but in the real sense of how we meet that gap, and then that also helps. Going on to Firas, because those are the questions I was planning on asking you.
Sure.
On how this ecosystem just goes away from being an arbitrary, or Kenya is a fintech hub, to a more inclusive and more functional platform that users can actually benefit from. These are also questions Anna raised. Could you also please touch on how some of this, mobile wallets can be integrated into fintech to give it depth? There's a question of your customer, which is a big issue in the region, in many of the countries in the region. How do fintechs address those questions? And overall, if you could finish with answering, how do regional investors, East African investors, come into play in here? Because the fintech space, the general startup space, is dominated by non-East Africans.
Absolutely. First of all, thanks very much for the invitation. It's been so far a very, very interesting discussion. I want to pick up on some points by Johannes and by Anna. First of all, absolutely, it's an ecosystem approach that's required, which I see slowly developing, but perhaps could be developing quicker. And second, yes, infrastructure is absolutely an issue and one of the core issues that must be addressed. But let me take a step back and start by saying, first of all, fintech in East Africa is at a very, very early stage. So I'll give you one statistic. Mobile money has been around in East Africa region for almost 10 years now. And if you look at the total transactions by consumers, 95% are still in cash, despite the fact that mobile money is quicker growing in East Africa than anywhere else in the world. But still, 95% of consumer transactions are paid in cash. Okay, so that's one data point you can look at and recognize exactly what Anna was saying with respect to access versus inclusion, access versus actual usage. There are breaks and gaps in the system, and maybe we can discuss a little bit of what those are. So I do think payments are a foundation for the fintech ecosystem. So without digital payments, there isn't really much you can do with fintech. You cannot do you cannot build a fintech operating system on cash payments, on fiat cash payments. Okay, so payments are the foundation of the ecosystem, but at the same time, payments are not they're a necessary but not sufficient condition. So the way I've seen payments develop in the East Africa space, and in particular, I can point at Tanzania, is more as a transaction mechanism as opposed to a trust building mechanism. If you look at developed economies, payments fundamentally play a trust facilitation role. So for example, take a credit card. Okay, if I have a credit card and I go to a shop, say in the United States or Europe, and I purchase a $100 microwave, okay, the merchant doesn't have to worry whether or not they'll get paid that $100 because the credit card is assuming that risk of whether or not that payment will actually happen. The bank that issues the credit card then goes to the consumer and requests that money by the end of the month. And then they manage the payment, whether there's interest or whatever. Okay, if you look at the mobile payment networks in East Africa, they don't have that trust mechanism built into the network yet. So what happens is every transaction is prepaid. And then as a result, when you talk about e-commerce, there's fundamentally a lack of trust between the consumer and the merchant. And the payment networks are focused primarily on movement of money, not on transaction of goods. So for example, if you take Tanzania as an example, okay, 80% of mobile money revenues are coming from cash out, which essentially means a consumer is ready to pay a surcharge to take cash out of an agent and then go and pay a merchant in cash. Okay, that transaction between the merchant and the consumer could very well be digital itself, but it is not. The consumer prefers and the merchant prefers that transaction at point of sale take place in cash. Why? Because there are values to cash. It's very transparent. It happens exactly what Anna was saying. You don't have to worry about the infrastructure signal, whether your phone is working or not. You don't have to type in a bunch of numbers. The USSD interface for many mobile payment operators is very clunky. So ultimately, what it comes down to is people prefer cash despite the fact that the digital payment is available. And then if you talk about, say, e-commerce, okay, if I order a laptop on a website in East Africa and I receive the laptop that's not exactly what I ordered, am I going to order from that company again? I will not. And if you look at the struggles that Jumia has had across Africa, this is really at the core of it, is they were never able to build that trust because all the other mechanisms around the ecosystem which allow for e-commerce to develop weren't there. So if you compare Amazon to, say, Jumia, Amazon, when it started, never had to worry about logistics because the post office worked. It never had to worry about payments because everyone had a credit card. It never had to worry about internet access because it was almost universal. So the only thing it actually had to worry about was trust, okay? For an African e-commerce provider, you have to do everything. You have to build the logistics network. You have to manage the payments. You have to build the trust. And that's a very, very much more difficult value proposition in a market that's much less lucrative. So if I look at the US market, $1 trillion market, yeah, of course, it's very easy to go into e-commerce in the United States or Europe. But to go into that in Africa, it's a totally different value proposition. And I think until you start to build the ecosystem that Johannes was discussing, it's going to be very, very difficult. So ultimately, what I see as the fulcrum for this is to look at payments not just as a movement of money, but rather as a trust building mechanism that allows commerce to happen. So the fintech that is processing the payment must care about what is actually being transacted, not just that they're taking a fee for a service. Okay, when that happens, and you see these examples all over the world. In fact, Alibaba only grew up with Alipay. It did not grow up in the absence of Alipay. It was big, but it never really fully grew up until Alipay happened. And that was because Jack Ma understood that fundamentally we need to manage the trust between these merchants and consumers. One thing I would mention about Tanzania in specific is, interestingly enough, about Tanzania, you have 3 large mobile money providers, unlike in Kenya where there's one large dominant provider, which is where I think we need to have competition, right? We need to have competing interests. And in that, you start to see more, you see interoperability first came in through Tanzania because you had multiple players, okay? So this ultimately, I see payments moving in the direction of a less. Right now, it's kind of the big moneymaker in the fintech space in East Africa. Eventually, until payments becomes more of a commodity, you're not going to see the next level of value propositions develop. So this is where I think competition amongst payment providers is important. This is also where I think, the question of building walls around payment networks, such as, I have a SIM card that is associated with a mobile wallet. That doesn't mean that I can't transact with someone who has a different SIM card. My payments have nothing related to my cell phone network. So I think there's a lot of legacy issues in the fintech networks around, which MNO is the provider of that wallet. How do they interact with other MNOs? How's the interoperability? Do they build walls around making sure that that payment stays within their network? So these are issues I think need to be discussed. I think the issue of investments in Africa, if you look at the foreign investments in Africa, it's been primarily in payments and also in credit. And I think those investments are driven by foreign understandings of the market, not local understandings of the market. So I think it behooves African investors who recognize what's going on the continent to focus on fintech more so than just waiting for external investors. The credit issue is a good one. It's not clear to me that giving loans, unsecured loans to individuals is ultimately expanding financial inclusion. And I think you're seeing a lot of concerns around people falling into debt, people taking loans from one provider, then paying it with a loan from another provider, then paying it from a loan from another provider. And the numbers might look good, but ultimately that's kind of like a Ponzi scheme. So it's a little bit a cart before the horse from my perspective. I think part of that is driven by a misunderstanding of the status of the African market and where people can invest. And I think the investments that will bear the most fruit are around how do you build that ecosystem that goes beyond just the payment side. So you're talking about logistics, you're talking about last mile delivery, you're talking about managing supply chains, helping retail shops get the products that they need in order to service their consumer. How do you access the consumer market through the retail shops that are currently serving them? So these are questions I think that are important. I think one thing I might close up on is on the regulatory side. I think regulators absolutely need to look very carefully at the global players that are coming into the space, the Facebooks, the Googles, the WhatsApp Pays, all these international providers. My sense is in some areas, you really need to have local companies build the infrastructure first before these larger players come in, because you don't want to sacrifice the understanding of the market and the ability to service the consumers with that core that knowledge coming out of them out of these African companies. So with that, I'll close and look forward to questions and discussion. Thanks, Samuel.
Thank you, Firas. I'm being told we are running out of time, and I see we have 3 questions. What I'll do is I'll ask the first question to Yemiru, and I'll make it a yes or no question. Is M-Pesa model an outdated model for the rest of Africa at this stage? How can new models be an equalizer and game changer with financial inclusion? I'll let you answer the first part. Do you think M-Pesa is an outdated model?
Yes, 100%.
Okay.
And I think the discussion has taken place here in terms of building the ecosystem and being able to transact is a key. I think is the key ingredient here.
Exactly. Thank you. And then the other one, I guess I'll let any of the 3 other panelists speak if they decide to. It's on the trust that Firas has been raising on. How much do you think the presence or lack of digital ID affects the emergence of fintech in Africa? And the other one is financial education needed to drive needed trust and understanding for customer acquisition and adoption of inclusive fintech services? If so, who is providing this education and how are they doing it? So the question of education and the question of digital ID.
So maybe I can take the question of education. I have an experience with that, and maybe someone else can handle digital ID. On education, absolutely. I mean, I'll give you an example. We're running a B2B commerce operation in Tanzania right now, and it's necessary for us to go to each shop owner and train him how to use the Android phone and the hamburger menu to navigate the app. So the assumption that if you build an app and it works, that people will download and use it is absolutely not true. These are retail shops that require hand-holding, and even to update the app. We had an app update. We actually had to send our sales team, many of them, into the market to instruct them how do they update the app, how do they go to the Play Store and update. So this is a totally different market, and you really need to handhold. So the expectation that a consumer e-commerce play can come up and everybody will download an Amazon-style app and start ordering is unrealistic, at least in the short term. So education, and then of course trust. That person, when they place that order, they don't believe that that thing is going to show up. The first time it happens is the first experience that they have that it did work. So that's a very, very critical thing. You cannot drop the ball on that initial trust building exercise.
I wanted to add something on education, financial literacy and digital literacy especially, because we at UNCDF, we also work with, we also look at the customer of user and the existing socioeconomic networks and what people are used to do and used to know. And sometimes I feel that there is also a disconnect between how interventions are designed and deployed and what people consider, how people think about finance. I see that there are some informal mechanisms that already exist in the population, and sometimes we fail to leverage those ones. We say, no, this is not good. Maybe you should open an account. Maybe you should do this, this, and that. We don't make often we don't make the extra step, and we put the consumer, the customer, the user, call it however you want, in a difficult position of inadequacy or not being good enough, or feeling that I don't understand. Maybe I don't know why this app does not download. Maybe it's me. Sometimes there is a lack of skills around, especially digital literacy. But sometimes it's just, maybe it's not very intuitive. The financial education is needed, digital education is needed, but there are some things that are already embedded. They know, most people I meet in the field know how to manage their money much better than me. That I can guarantee. So sometimes we go with preconceptions and we impose something. And who gives does these initiatives? Generally, it could be the government, it could be private sector. Sometimes mobile network operators have very nice initiatives in education, and also the UN NGOs. Those are normally the actors that design and implement financial education programs and digital education programs. UNCDF is one of them. And with making a link on to digital identity, having a digital identity could facilitate onboarding to some extent, but it's not the solution. It's about registering oneself and being able to register easily. Already having one identity, if it works, that's enough. Then we can take another step. It's not that if we don't have any digital identity, then we don't achieve financial inclusion through fintech. It can facilitate, make it faster and easier, and maybe simpler, or maybe not. It really depends on the context, I would say.
Johannes, I think you're muted. Johannes, I think you're muted.
Yeah, if I may, sorry. Quickly, I think there's a third element to building trust. That's regulatory, having a robust but flexible and user-friendly regulatory system. Trust, the public will not, it doesn't matter whether it's fintech or any other sector, there's always self-interest in the marketplace by operators, players in the marketplace. And a fair and just regulatory system that's efficient. Of course, this sounds oxymoron sometimes saying that, but it could happen when you have a fairly organized regulatory system. It adds a level of trust in the system. If the regulatory system can hold the players accountable at every level. But ultimately, for people like me who's working in the development space funded by donors, in my case, USAID, we're work to alleviate, eradicate poverty, reduce poverty. So digital IDs or national ID systems create a credit system, a system for people to access credit, and not in a more, if it's properly provided in a more structured way, it could do a lot of good and accessibility, but building assets at household levels and so on and so on. So we should remember it's not just the economics and the money and the economic expansion that comes in with development of fintech, but it really affects people's livelihoods. It improves people's lives, and these systems have huge potentials to do a lot of good.
I see Yemiru is also itching to comment on that. Could you just give us your experience, because you're also on the ground doing the exact same thing. How do you create trust for your clients?
Sorry, I was muted. The trust part of aspect of it is very important, especially in our case in Ethiopia. When we started, mobile money is still at its infancy. We didn't create Amole to become a mobile money, but we created it to become a payment and a commerce platform. And with that, there was no payment, so we had to create payment. But the payment, in order to onboard people, they have to trust that payment infrastructure, that it is going to be able to transact when they want it, when they need it, at the same time, in terms of equivalent or faster than cash. So that was very important to us in terms of building. And like Firas was saying, we had to deploy salespeople in different places. We still do that to this day. In every supermarket, in every locations that we have salespeople that will help the customer be able to, I can give you a 3% discount if you shop today using Amole. And what happens is that they want to see that in effect immediately. And we load, we activate them, we take them to the cashier, they transact, they see it, and they believe it. That part of the trust, if you don't handhold them, if the OTP is delayed, if the network did not work, immediately they want their money back. And that is right there and then. And you have to give them back their money. And hoping that the next time around, they will trust you to be able to transact. And in our case, payment, the whole payment aspect was not there. We have to build payment in order for us to be able to transact in terms of building the ecosystem. So now, with the building of ecosystem in our commerce platform, we are in every outlet that we sign up, we always have to provide the capability to assist the customer through every phase in terms of being able to trust the system.
Thank you, everyone. I think the one key word that has come out over and over again has been the question of building an ecosystem, not just talking about fintech as an arbitrary term. And it's interesting to see the octopus legs of what this means. This conversation could go on for another 2 hours, but I'm glad you all joined us, and I hope the audience was able to get us some information from this. Thank you very much, and I'll see you in the main panel. Ciao.
Thank you very much.
Thank you very
you
much.
have a good day.
Appreciate it. Thank you. Thanks, everyone.
Thank you.
Great conversation.